Good morning, good afternoon, good evening, and good night. You're watching another episode of the Engine Room Podcast brought to you by tokenmetrics.com. Let's go around the horn real quick. I'm not the only one here. We've got Mr. Stephen Tuttle, our scribe.
Hello, everybody.
We've got Bill Noble, chart wizard. William Gann is his homeboy.
Hi.
Jacob Koch Gallup, our market analyst who knows a thing or two about how to price NFT. If Jacob had a show, I think we should call it NFT Roadhouse, like Antiques Roadshow. Something like that, Jacob.
I like that.
And we got to introduce our special guest. Mr. Dominic Ryder is joining us from the UK today. He's here to talk to us about his company, vEmpire DAO. DAO? We'll talk about
DAO, whatever you like.
We'll talk about the pronunciation of that later as well. Excited to learn about Dominic and his company. But first, we're going to go through some news. We've got, I want to give a plug to Cointelegraph Magazine, which is kind of the long form response to Cointelegraph's regular daily news articles. Cointelegraph Magazine today has published a pretty interesting profile of a crypto Twitter influencer who has attracted a large following by merging crypto analysis with astrology. And I kind of want to immediately throw it to Bill. Bill, there's going to be people out there who have no idea that astrology is a thing in finance. Could you talk a little bit about how this isn't even new for crypto? This is like a thing people have been doing in finance for more than a century.
Yes. So everyone has TradingView, right? Everyone can look at price. But the real secret to success, or at least, an edge, is if you can talk about both price and time. All right. Now, a lot of people go, oh, God, astrology, really? Yeah, but you have to remember, if you went back 500 or 1,000 years ago and said to somebody, what time is it? What season is it? Well, they would just look up in the sky. Or where are we on the sea, right? They would use the sun or the moon. So astrology or astronomy is a way of telling time. And if you can figure out how to merge price with time, then, you're going to have an edge. This was something done by a famous technical analyst, William Gann, back in the early, 20th century. And back in the 20s and 30s, Gann made $50 million trading during the crash and the depression. So that's a lot of money. I know that the astrology thing gets a bad name sometimes, but if you can marry price with time, just take a moment to think about what $50 million was worth in 1930.
Yeah, I'd be remiss not to mention that we have an astronomy student here with us. Jacob, you're earning a minor right now in astronomy, or you've got some interest in astronomy?
Yeah. I've taken a few astronomy classes. Just took one last semester called Life in the Universe. So,
has anybody in those classes ever talked about the relationship between the stars and money?
No, we haven't, and that's interesting because I'm a philosophy major, love astronomy, and finance minor, so I have maybe that connection right there.
I'm in a lot of trading groups because previously I was a derivatives trader before crypto, so I'm still in a lot of these channels. And the past 2 years, I'm seeing it more and more. People are putting up charts with the lunar cycles, and I hate to say it, but you'd be surprised that that sometimes the correlation is a bit spooky. But I always have said that when we're trading derivatives, all it takes, like a upside down Bart Simpson pattern, for example, these things just come from one bloke who says it once, and then people start to look at it. It gets big enough that people recognize it, and then buys and sells a place based on it. And that moves the market. All technical analysis is people believing it works. If people believe it works and they base on it, then there's your price action.
Yeah, this is spooky magic stuff. Technical analysis and astrology and finance. It works because people say it works. That's one of the main headline take. I haven't read this article, this feature in completeness, but if you just read the headline, one of the main takeaways is that this stuff beats technical analysis. So spooky magic stuff, I'm here for it. I'm super curious, and whatever it takes to make $1, right? Whatever works. Let's move to the second news item really quickly here. Big M&A acquisitions because Microsoft has bought Activision for $69 billion. This is all being done on the premise that Microsoft is about to make a pretty serious metaverse play. Super hot topic from last year spilling into this year. Guys, what do we make of Activision being Microsoft's metaverse arm?
Well, this takes us to what Bill was saying on our last podcast, which was that it might be necessary for corporations to buy land in order to be cool or fit in, so to speak. They need land because of advertising and marketing to reach the people. That is the speculation that people are saying as to why Microsoft bought Activision right now. It's up in the air. I would like to know what you guys think about that.
I think we can dovetail pretty nicely right now with Dominic, because our guest today is quite active when it comes to virtual real estate. And Dominic, I understand that your background is the finance side of real estate. Not to say that you were a real estate agent, but you were operating at kind of a VC fund that was focused on real estate in the real world. Could you talk about that and how you got into metaverse stuff?
Yeah, absolutely. So I worked at a VC that focused particularly on the boring stuff in VC world, not looking for Facebook, Google, Amazon, the next Apple, looking for asset-backed investments into pubs, hotels, care homes, anything with a freehold property that should the underlying trading go badly, you can take charge and you've got the protection there, sort of the asset-backed element. So that sort of lent itself, as close to virtual real estate as sort of something could lend itself. It came in quite well because I realized that the market had quite a disparity between how it valued virtual real estate. I always say that the more sort of mature the crypto market gets, the more traditional, whether that's stock market, whether that's now sort of real estate, metrics and valuations will come into play. So it presents an opportunity right now because you don't yet have that. So you can, if you have experience in the area, then you can use the the boom methodology. Apologies to anyone who's listening. But yeah, to look at and then relate that back from the traditional markets to the crypto market. And if you can find what is undervalued in the traditional sense, you would expect that over time, those will pass over as it becomes more mainstream, and you'll be getting in a price that, because, what's everyone looking for, where the price doesn't represent the market value, that's when you get involved. So that's the opportunity I saw when I moved over.
We've talked in previous episodes of this podcast, Bill. I remember one where we were talking about this question of when is Walmart going to buy land in Decentraland or another metaverse, for example. And while it was cool to see them kind of ride the hype train, and it does seem like they endeavor to do some pretty serious crypto things, why is it so hard for these older school companies to actually pony up the money and buy this stuff? Dominic's company, by comparison, is built around buying this stuff. So when will we see kind of this reflected in the older school business world, do you think? Open question to everybody. Who's going to be the first old school company to jump into the metaverse meaningfully?
All right. Well, I think when you look at what Microsoft paid for acquisition, that number reflects the cost of not having a metaverse strategy. In other words, at Microsoft, they said we need to have a strategy, and how much are we willing to pay to get one? And that's what the Activision purchase price represents. So
the ultimate FOMO
right.
Situation.
Right.
Okay. So Microsoft has some FOMO when they bought a $70 billion company to scratch that itch.
Right. So you have to ask yourself, is that the first $70 billion purchase, or is that just like the beginning of the sort of corporate FOMO? Now, some companies can maybe build their own metaverse, right? Maybe. Eventually, all right, and this is a question I have for Dominic later. I have so many, but once corporations start FOMOing into the metaverse, particularly since there's a shortage potentially of the artists and the tech talent to build out the metaverse, I mean, it's just a matter of time before they start coming into the decentralized world, because nobody can be left out on this. I remember back in 2017, no corporation could conduct an earnings conference call without using the word blockchain and discussing their blockchain strategy. The new word, obviously, will be metaverse, and everybody will want to know what's your strategy, right?
Yeah. Well, now sounds like. Go ahead, Dominic. Take it.
Well, no, I was going to comment that in terms of that, some of the sort of NFT areas that we're specifically looking at, we own a Bored Ape. You can't really be a metaverse or NFT buying protocol if you don't have one. So we got one of the top 250 rarity Bored Apes. It's a 4-trait ape, and it's very, very plain. It's just brown fur, zombie eyes, which is quite rare. But the reason why we picked that up is because of corporate FOMO. We wanted to buy an ape that was plain enough that a corporate could take that on and rebrand it. And that's why a lot of people are buying 4-trait Bored Apes. So we are putting that into our strategy, especially with sort of where we're located. The benefit is, I say this a lot, but since we first bought our first 3x3 estate, we bought that for $50,000, and the floor price of land in the sandbox has gone up by 960% since. And that's the singular parcels that are surrounded by other singular parcels, like miles away from anything. We're neighbors with Animoca Brands. We're right in the center next to sort of the spawning point of the sandbox. So we managed to pick all of these up so cheap. And I said it in our latest report. I say it a lot. I don't know if it's a good thing that sort of Facebook rebranded and, everyone started jumping on the metaverse hype train, because yes, it's good that it obviously it had a impact. We sort of sailed that train up back in the bull market when metaverse was going up, and it was great to get the recognition, but it just dilutes the market, because it's like how at first you had every man and his dog setting up a baby Doge, sister Doge, cousin Doge. Then you suddenly had this Inu, everything Inu. And then now you've got everything Meta. In fact, there's even Meta Doges, and I'm sure there's a Meta Doge Inu that's going to come out. It's just, it's the new hype. And as a protocol that invests in stuff, it just makes it so busy. It's quite easy usually. You can usually even tell by the chain it's on, the quality. But it's a bit of a minefield. But we are already focusing our strategy based around corporate as well as retail demand.
It seems like there's, what you're saying is there's a lot of artificial growth in the metaverse space that's going with, there's probably a lot of ignorant investors, and then that's also creating a lot of poor quality projects. I have a question, because you mentioned Meta or Facebook earlier. Do you think your DDAO will invest into, if you can, into Meta's metaverse? Because I'm thinking about it, and it's like, you can say, oh wow, it sucks, no one's going to use it because it's centralized, but at the same time, there's billions of people who use Meta products like WhatsApp or Facebook. It's probably going to do well, as much as I hate to say it.
No, I completely understand. Sort of our protocol works by highlighting centralization in supposedly decentralized protocols. Obviously, it's a bit different because Meta isn't claiming to be decentralized. That also creates the potential problem that if we were to sort of invade and continuously purchase land, they can actually stop us because they don't claim to be decentralized. With Sandbox and Decentraland, they say they're decentralized. Therefore, even if we started taking over, even if we took over, if we had 100% of the lands there, as a decentralized protocol, their interference shouldn't be there. But with Meta, it's the other way around. So we can't be quite as aggressive, perhaps, in our approach. But yeah, by all means, people who stake on our platform, as much as we love to think that they're doing it because they believe in decentralization, in reality, I'm sure that they're quite interested in the yields as well. So by all means, where there's opportunities, we'll definitely be there. But, I think that, yes, it will be very popular. But if you look at what Facebook is now, I see that as what the sort of metaverse will be, just a bunch of it's everyone's parents now on Facebook, isn't it? Let's be honest. We have Facebook, but it's mostly used by people over 40 nowadays, and people everybody wants to be edgy, don't they? Nobody wants to be just another sheep. Just oh yeah, where do you hang out in the metaverse? Oh yeah, I'm in Meta. I think it will just be everyone's going to be looking for the cool thing, and the cool thing is going to be blockchain. It's going to be decentralization. People aren't going to want to spend time in the same place that their mum and dad are walking around. They'll be in the cool place. So that's my thoughts on it personally. I think they're trying to keep up with hype, but I hope that people support the decentralized protocols, and I'm confident they will.
Yeah, that's a great take on it.
I would say, my bad, it's a little hard to talk with 5 people, but I would say we completely agree with you, Dominic, at Token Metrics. And a big complaint that people have with crypto in general is they'll say, okay, there's however many tokens there are now, 6,000. What is stopping someone else from making another token? What is the inherent value in all of these tokens? What's the inherent value in metaverse land? And we would agree at Token Metrics that it is the network effects that are built from decentralized networks, where exactly what you said, Facebook could just make the rules on their land. They could kick you off the land if they want to, if they have a centralized metaverse. But in a decentralized metaverse, you buy the land and you actually own it 100%.
Absolutely. Saying that in terms of, well, we all know the crypto market's definitions of value are not necessarily the same as, a sane humans, in terms of what people actually put value on. Sometimes it can just be having the word Inu after your name. But, what my take on it, and moving over from sort of, asset-backed venture capital, before that I was in wealth management, then sort of derivatives and on the trading side, sort of moving over from that world, I thought if can create a protocol such as vEmpire that actually does, purchase and bring assets onto the protocol, then that will be reflective. Because what is a token made of usually? A community, potentially a platform, a protocol. It might be DeFi, it might have TVL, but where is the tangible assets and value? So some people would argue virtual property doesn't count as that, but I would argue it does. And as I say, in the latest report that came out, our floor price of all of our assets is higher than our actual market cap. When you have a TVL on a DeFi protocol, people say, well, our TVL is worth a billion, so we should be worth $1 billion. But, that isn't necessarily, it's all artificial yield. So you're just paying tokens from one place to another place, and people earn money from that. Which, yes, that's the initial incentive to stake on our platform. We send them from our emissions to stakers. But once those tokens are actually staked, we use those to purchase real virtual assets, but within these metaverses, which we then monetize. And every metaverse is different. You've got Mana and Sand, which are mostly property. Sand, you can also implement play to earn. Unfortunately, Decentraland, most you can do at the moment, gaming-wise, is Pong. But yeah, you've got so many different ways of monetizing, Axie, the scholarship model, etc. So we don't have artificial yield on the secondary yield. Our emission schedule will run out, but when it does, we will have huge amounts of assets in multiple metaverses, and we will be able to sustain stakers from those, because we don't need to rely on this artificial yield that sort of DeFi pays out at the moment, because we'll have real assets with real yield.
I just want to take a moment to quickly plug Dominic and his company's report that came out today, financial report for Q4 2021. If you're listening to this and you're interested in what this guy's talking about, if you are particularly excited about crypto and metaverse topics through the lens of real estate, go check out vEmpire Digital on Twitter, and it'll be one of the most recently tweeted things there. Dominic's company's Q4 report is public facing, and it's out right now if you want to learn more about that. Does anybody have any more questions for Dominic before we wrap this thing up?
Yes.
Yeah,
That's what I like to hear.
You first, Bill.
Okay. So, love the report. With your ETH staking, and even with like the staking for the metaverse land. So if somebody comes into your ETH pool and says, I'll give you ETH, and then that will allow me to participate in NFTs like a Bored Ape. Now, when they give you that ETH, are they given an ownership certificate? Like you've got, 1/1000th of a Bored Ape, or is it like a dividend play, like a REIT where, if we sell our Bored Ape, we'll give you a dividend on what you staked, right? So are stakers owners, or are they expecting a dividend at some point?
So it's more a dividend model. So as I mentioned, the primary yield in VEMP is paid in block rewards. We send to the Ethereum strategy, we send 1.5 VEMP per Ethereum block, and that is split proportionally amongst stakers. The same is on Ethereum in that it's split proportionally. So we don't want to have a set, if you like, dividend date, because it means that people will front run. The ETH stake that we use to make that profit, if we have like a set every first of the month that we do that, the people who stake the ETH that we use to make that profit, if everybody suddenly came in before that date, then it would dilute their return. So we do it randomly, but we try and do it sort of once a month. But the Ethereum is sent to the staking pool, which makes it instantly claimable proportionally for its holders. So one thing I'm conscious of, and where I said vEmpire sort of highlights centralization within decentralized metaverses, is that we didn't want to be a land baron. We don't want to just buy virtual properties to flip them and to hold them, which is why we've developed on all of our lands in Decentraland, in the sandbox. At the moment, it's hard to keep up with purchases versus developments, but we don't want to be just somebody who quickly flips these lands, because if you talk to any metaverse protocol and you ask them what is their pet hate, what would they change, Decentraland will tell you every single time it's that it's empty. It's not like how you'd imagine, like rows and rows of shops and tons of people walking around. A lot of it is just makes it sound bad, but just wasteland. It's just empty plots where people should be building stuff. Everybody owns it. Every parcel is owned in Decentraland, but I think there's only probably like 10% of it developed. So we're good for absolutely everybody. Not to blow smoke, but essentially we are good for a protocol because we provide constant demand for their NFTs and their assets. We also take their tokens out of general circulation, which obviously can reduce sell pressure and increase scarcity. So that's on the protocol level. For the users, if you have Mana in your wallet and Sand in your wallet, those tokens are, pure utility tokens. They exist and they work within the respective metaverse. Having them in your wallet, like 99% of their owners do, it's not really doing anything. If you give it to us and you stake it on our platform, at least we will use it for its intended purpose and we'll pay you a yield for it. So the protocol wins, the user wins, and 20% of the profits go to our DAO, which is VEMP stakers, and they win as well. So, we often struggle with nailing down what exactly the Empire and the VEMP token is. Is it DeFi, virtual real estate management? Is it gaming due to the games that we create within metaverses, or is it a metaverse token? But I describe us as the first layer 2 metaverse protocol, just like Polygon is built on top of Ethereum. We encompass all gaming and metaverse protocols. We can be as dynamic and flexible as we like. We're already on 3 different chains. I spoke to Star Atlas yesterday. We'll go on to Solana ASAP. So we can add staking pools so quickly. Starlink, our most popular pool, we own 18% of their metaverse, 3% of their token supply. They only launched a month before we did, but I saw it was popular and I had our developers add it sort of last minute, sent it to audit, and then there you go. So we have something very rare in crypto, which is the ability to be flexible. We can follow trends, whatever the next hype protocol is. As long as it's on our chain, we just need to, get the contracts in place, and then off we go.
So, Dominic, I saw from your investment report that your company believes that GameFi will be the first smart contract technology to actually achieve mass adoption, to actually bring in all the users and stop the metaverse from being a wasteland. Now, this brings me into the idea of, could game finance be where the actual players go play? Say there's like a Call of Duty game that involves NFTs and digital assets. Could the metaverse environments sort of act as a hub for these players from multiple different games? Has that been something that has ever crossed your mind?
Yeah, 100%. I truly believe my pet hate. I mean, I wish I had time to play Call of Duty now, but my pet hate was that every time the game upgraded, you lose everything, all your skins, all your upgrades on your guns. You're left with iron sights. Who wants that? But when you have real ownership, you can hopefully they can implement this, carry these things forward. I think it is only a matter of time until the switch comes, because as soon as Call of Duty has a competitor with ownership of assets, then they'll immediately realize that, we are behind the curve here. All it takes is for their pockets to start hurting, and they will instantly switch. And that's all it takes for any of these companies. Once the market share begins going, then that is exactly when that they'll go, and it will all come at once. It will be a stampede. I think, when it comes, it will be something to behold, because we see it because we live it every day in crypto. We see all of the applications of blockchain because we understand it. But 99% of people don't understand why blockchain in gaming could be revolutionary. 99.5% of people don't understand. And I think that once people finally cotton onto it, then it will just be people falling over themselves trying to implement it, because it would be, anyone coming in, like I say about the metaverse hype, it's just people are looking at stuff that's currently out in the normal market, the normal game market, and they're thinking, oh, that's nice, copy and paste that, but implement smart contracts, got myself a game. There's no creativity, no, but you're taking a concept that works out there, putting blockchain in, people like it out there, they'll like it with contracts. Same thing for these companies. Just a matter of time, and it's going to be quite the sort of falling over each other when it does happen.
Yeah, you're reminding me of Reddit co-founder Alexis Ohanian saying recently that in the future, play to earn will be the only games that we play. So this stuff seems to have a certain inevitability about it.
Yeah, absolutely.
Any other questions for Dominic?
Yes, one more. So obviously we're in the world of crypto. So, nobody in crypto ever met any leverage that they didn't like. So in your case, when I read this report, I'm like, oh my God, this guy's running a digital REIT in a way. So could you go to the legacy market and issue debt to lever this up or buy more real estate so you could compete with like a Silicon Valley company, or even go, have your DAO go public? If that's a stupid question, stop me, but
no, it's not.
Could you do it?
Obviously,
or would you want to?
From a property fund background, then it's something that was in physical world property funds, a certain percentage of gearing in the portfolio to make sure that you're not missing out on assets as and when they come up. It's just the age-old tale of risk versus reward. You can't put too much gearing in, because if it goes badly, then obviously, you're not going to have happy stakers. So are the facilities in place for that yet? No, the infrastructure isn't there. Is the concept perfectly sound? Absolutely. It's something that would be considered as and when the options are there. Arve does have sort of mana lending at the moment, but I'm working with, and I've invested in a protocol that's coming up, which is looking at this sort of thing. But yeah, it's hard because like so many ideas, so many things, but I've got a development team of 13 developers, and even I just can't do everything at once. So I think that absolutely an element of gearing to a normal property fund is definitely needed, even low 10%. So the same would be great in virtual property. But as I say, that will hopefully come up when the traditional market does. I always find that, with these sort of real estate and virtual real estate, people don't necessarily refer it back to a normal fund where you have the fund price, and then the difference between a share fund and a property fund is you also have the net asset value within a property fund. So when when you have black swans like COVID or Brexit here in the UK, what happens with a property fund? Immediately they gate to redemptions, withdrawals from the fund. And the reason they do that is because, like I mentioned about what is value, it's just buys versus sells. The fund price immediately tanks below the net asset value, but the properties there, they're still standing. They haven't suddenly been bulldozed over because Brexit or COVID. So this hasn't been noticed yet at all by the market. And in fact, in the report, it's pinned on our Twitter at the moment, but you'll see that in just 3 of our pools, when I did this analysis back on the 12th of January, how do you value a metaverse? Well, I would argue that you've got the same 2 things sort of in a real estate fund versus the metaverse. You've got price that moves versus on buys and sells. So for real world, you've got the fund price of the property fund. And for metaverse, you've obviously got a token that moves on buys and sells. And then you've got the properties. Both of those are, one metaverse, one physical. So how do you work out the net asset value? Well, you'd think that you divide the price, the token, the market cap, by the number of properties available, the number of assets in there. So when I did this calculation based on our ownership and percentage or ownership of Starlink, Mana, and Sand, the value of our assets as the crypto market values them, not even us, just these are the prices of Sand, Mana just divided by them. We're just doing the maths. I think the market cap of just 3 of our pools based on that valuation was 50 million compared to our current market cap, which is like 22 million. So yeah, it doesn't make sense at all, but the crypto market doesn't make sense, does it? People decide what is valuable. People denote the price of things. People don't relate it to anything. People often say, when I'm explaining to people who don't know blockchain, they say, but why is Bitcoin worth, where's the value? You can't do anything with it or whatever. Or, obviously I know that's not true, but this is what people say. And then you have to explain the concept of ownership, and you have to explain, why it is valuable. And that's what I was hoping this report would do. And, my goal for this year even is to talk to, as many people as possible, get my voice, get my face out there. Because the value, proposition of virtual real estate and, because of that, the empire is astronomical. It's just that we're so early. We are currently the only protocol that facilitates a staking of metaverse tokens with this strategy. Mm-hmm. We won't be the last, but But yeah, we have no competition, and we're a new concept. And people think, for example, Axie Infinity, people think it came out of nowhere, went instantly up 25 billion play to earn, but it was sitting around for years. No one noticed it. Nobody cared because it was a new concept. Nobody could understand it yet. And then it just takes a few people who start to notice. So this year for me is very much about explaining it, because once I've explained it to people, then they're as keen as sort of your questions have been in wanting to learn more and fascinated by it. So that's my goal, just to educate the market on the proposition, because I have no worries about our future.
Yeah. Well, Dominic, I want to thank you for sharing a little bit of time and expertise with us today. It's time to wrap this thing up. By way of reminder, you're watching the Engine Room podcast, brought to you by tokenmetrics.com. Our guest today has been Dominic Ryder of vEmpire. His DAO is doing a lot of interesting things in metaverse and real estate. If you want to learn more about it, be sure to check out their Q4 financial report, which is available at their Twitter. Thanks for watching another episode, and we'll see you next time. Thanks so much.